Well, good morning and happy Wednesday. Welcome to the Arizona Real Estate Update, where this channel you get to see numbers and you'll get to recognize trends. And not only does that make you more knowledgeable about the real estate market in general in Arizona, but it makes you an instant hit at all the cocktail parties. But in order to have all this knowledge passed to you, you need to subscribe. By subscribing, you get notifications whenever I go live. And do me a favor and hit that like button, because then YouTube will put this video in front of more people. I'm going to get to our question of the day here in just a moment. Thank you, Esther and Jimmy. Inventory. It seems like that's all we talk about, right? So right now there's 4,942 homes on the market. They ain't about the same. But we had 4,318 come on the market in the past 7 days, of which only 3,875 went under contract. So let's take a look at what that looks like today. And what that looks like, it's a little encouraging. This is what I call the blue wave here, right? These are the listings that are coming on in 7 days. But then you'll notice the yellow line dropped here a little bit. And what that means is that down here at the bottom of the chart, we were 443 units short of what was available. So that's an encouraging trend, but it's so tiny that it doesn't really tell you anything. And it's only, 2 weeks don't make a trend. So we have to be careful how we look at that. If we go and we look at days inventory that was last updated on the 5th, you can see down here it says 15.5, but if you scroll all the way over, 16.1. That means that if no more homes came on the market, they'd all be sold in 16 days. Now, that's never, ever happened, but that is excruciatingly low. So that's a tough number. So we've got to get back out. Here's 2014 at 116 days on market. And then what is this? This is a chart refreshing. 2011, 147 days on market. So that's not really normal. This is kind of normal right here, 116 days on market. So we're a way off. I mean, we've got some inventory building to do. Let me answer this question here before I get to the news of the day. And that is, the question says, is there any link to houses coming back on the market and appraised values, or are appraised values more closely linked to sales as opposed to inventory? So the first question, are there any links that show you houses that come back on the market and their appraised value? The answer is no. There are only about 900 homes that come back on the market every 7 days, and appraisals are not part of the public record. Now, if you get an FHA appraisal on your house while you're selling it, and for some reason the deal falls out, then that appraisal sticks for, I think, 60 to 90 days on that house. But that's only, the other appraiser. If you go to have that house appraised, he's going to see that. Oh, you already had an FHA appraisal? Okay, I can't. Now, conventional, they don't stick. But they don't go into the public record because appraisals are just a measure of risk for the bank. And so, looking at the second half of that question, are appraised values more linked to sales as opposed to inventory? Both. I mean, sales and inventory determine the market value. Right now, the market value is climbing and climbing and climbing. So an appraiser gets to take that into consideration. They get to look at all the comps in the area, but then they also get to look and say, okay, this went under contract, 2 weeks ago. This neighborhood, this zip code, this style of home right now is going up about 3.5% a month. By the time this appraisal comes through next month, it's safe for me to go ahead and factor in that 3.5% as an increase, and then look at what you offered. So there's so many things that go in. If you've ever seen what is involved in an appraisal, it's mind-boggling. It's no wonder there's a shortage of appraisers. Then you have to have this whole period where you're out there being mentored for months before you can actually become an appraiser. And there's pages and pages of requirements from each different entity, each bank. It's not like there's an appraisal process for Chase Bank that's the same as across the board. You're going to have a appraisal requirements from Chase Bank and then another thick one from Wells Fargo and all the different investors. And so the appraiser has to go through and say, what do they want? What are they looking for? What do they want me to check off? And then they look at all the comps in the area. They look at what's closed. They don't look at what's for sale, because that's just what somebody's asking for a house. They want to know what's closed, and then they will look at homes that are pending. Now, in the MLS, if it's pending, it's still not going to show you what the offer price is. So a lot of times, the appraiser is going to be able to go in and see they were asking this and they sold it for this. But on pending, it's just going to say this house is pending at $400,000. They might have offered them $450,000, but so it's not visible. They can't see it. So it makes it kind of tough sometimes, but they do their job very well. Sometimes the appraisals, I think I was telling the story yesterday about my brother. He came and took 3 hours to appraise the house, and then they never heard from him again. So small little rural area up in Washington State. It's kind of brutal. We're going to talk today about the Federal Reserve and tapering. What is tapering? Well, right now they're buying $40 billion a month in mortgage-backed securities. Mortgage-backed securities are just traded on the open market. That's kind of what caused the crash back in 2008, was these mortgage-backed securities were bundled into packages and sold to investors who then bundled them into another package and then sold them. That's one of the reasons during the crash and during foreclosures, nobody knew who owned the house, who owned the loan. So even though they were foreclosing on you, it took them a year to figure out who owned the loan. And so it got very difficult. Now the central bank wants to keep a lot of liquidity out there. So they're buying these $40 billion a month of mortgage-backed securities, and they will eventually sell them back. If they start pulling back too fast right now, you're going to have what was coined a taper tantrum, where the market's going to go, oh, great. We're going to have to start buying bonds, and that'll make, or selling bonds, that'll make interest rates go up. If they start buying more bonds, interest rates go down. So the Fed has said earlier in the year, we're not even going to be talking about raising interest rates. The tide is starting to change a little bit. Article here from CNBC says the Fed is in the early stages of a campaign to prepare markets for tapering its asset purchases. In other words, what they're saying is they aren't tapering now. They're going to be meeting to talk about how to keep markets calm, because they know they're eventually going to have to pull back. So they're going to be having conversations saying, how can we do this without giving the market the jitters? Make sense? I don't know if there's an answer to that, but it goes on to say, comments by Fed officials in the past several weeks suggest the issue of tapering looks likely to be discussed as soon as next week's FOMC meeting. So they have a big meeting next week, and then after the meeting, they have the meeting minutes, and then we find out what their plans are. Now, possible taper timeline is what they're saying here. June or July, the Federal Reserve will discuss taper. September, November, Fed might announce taper. December, January, Fed begins to taper. That will be interesting, what happens here when they announce it. Because even now, if they just kind of suggest that they may taper, people are kind of wigging out. But where's the pressure coming from? Here, bond yields hit a fresh, oh, for crying out loud, what's going on with my mouse here? Bond yields hit a fresh 1 month low as taper bets recede. So the bond market, they're thinking, well, they're not really going to taper. So they backed off, and bonds, hit a new low. But German bank Deutsche Bank issues a stark warning about rising inflation. Economies are sitting on a time bomb. So they say that the U.S. may be headed toward one of its worst periods of inflation in history amid increased government spending and relaxed monetary policy, warning that the belief inflation is transitory could have serious consequences for the economy. Now, Thursday, inflation numbers are coming out. So the market's kind of in a holding pattern today, waiting for those inflation numbers. That's going to make interest rates do one of three things. They're either going to go up, they're going to go down, they're going to stay where they're at. And it says here, despite the shift in priorities, central bankers must still prioritize inflation, the report says. Indeed, history has shown that the social cost of significantly higher inflation and greatly expanded debt servicing obligations make it hard, if not impossible, to reach the social goals that the U.S. administration, among others, is keen to achieve. We fear that the vulnerable and disadvantaged will be hit first and hardest by mistakes in policy. They worry, in conclusion, the bank said the Fed's approach to inflation leaves global economies sitting on a ticking time bomb. So you've got Germany, which is a very strong economy, telling the United States, you really got to be careful if you're trying to push more inflation. It may come back to bite you. And there's concern that this is going to really, I'm looking at another article here, this concern that we're really going to reach rampant inflation. Now, Chipotle announced today that they're raising the price of their food by 4% to cover higher wages. That's going to keep going. And everybody's having to pay more in the service industry just to get employees to come back. Of course, you're going to have to raise the price of your food. So that's not going to keep me from going to Chipotle's yet. I'm too addicted to that. So another interesting article that I found, and I think I put the link in the body there, but I'm not sure. I'll double check it before I go. Where's the best place for me to retire? This is pretty cool. And you can go in here and you can pick your state. And then what's important to your retirement? You may know who lives there, what's the population, are they, what's their political leaning, money and work, medium home prices. You get to pick the weather, the snowfall, and then it will give you places in Arizona that match your criteria that you put here. So, and you can do that with every state. So have fun with that. I'm going to play with that later on today. Now, there is a program out there now that is called Refi Now, and it presents opportunities for some. People that have low income and have had some credit issues haven't been able to get their mortgages refinanced. But now Fannie Mae announced a new program that's out there. And like anything else that's in a government program, there's a lot of stipulations to it. And so they're saying, here's some of how it sticks. It allows debt to income ratios up to 65%. That's huge. So if you got a lot of debt and you haven't been able to refi, this program lets you refi. So 65% is pretty high. Borrowers obtaining refi loans must have income under 80% of the area median income. Of course, we all know what that is. No, we don't. So we had to go look it up. This is our median income for Arizona. I'm sorry, my nose itches today. 79,000. So 80% of that is 63,200. So if you make 63,000 or under, you can participate in this program to get a refinance. So meet with your lender to find out if that's something that you can do. At least there's another program out there trying to help some people. Now, yesterday they announced that they want lenders where they had them limited, that second home loans had to be no more than 7% of their entire portfolio. They lowered it to 6%. So far, it hasn't had any effect on the market. They're doing it for certain reasons. I hear lumber prices are coming down, though, right? Well, let's take a look. Let's see what we can pull up here. I'll see if I can pull up a chart. And lumber prices, they are coming down. Hard to type when I have something in front of my keyboard here. Lumber prices today. Okay, let me roll this over to my other screen. Here we are. So, roll this out a little bit. They are coming down. Talk from people in the lumber industry, the people who run the mills, are saying, well, they're coming down, but don't expect them to come down too fast. They're coming down at a pretty good clip. So it's hard to tell. Hey, Cody, thanks for the super chat. Do you think Santan will be a good area to invest in? I believe there is a bypass they're putting up. Depends on the part of Santan. That area down there is growing like crazy. Some of the things that concern me about that area is back before the boom, they were building homes like crazy. They were slapping them up, and they were slapping them up cheap. So there's certain parts of Santan where they need some remodeling. I've gone down there and looked at some houses, and the windows are deteriorating, and the kitchens were really, so then there's other parts of Santan where they're building some really nice really nice homes. And the problem with Santan has been getting in and out of Santan. Santan is in the far Southeast Valley, for those that don't know where that is. And it's always been like a 2-lane slow march into town coming home, from Phoenix or wherever you work. It's just all you see is either red taillights. It's tough. So if they're making a bypass, of course, that's going to be an excellent, excellent move for Santan, just like it was for Levine. Before the 202 was finished going around South Mountain, Levine prices started going crazy. Everybody was worried about the values in Ahwatukee because they were building this freeway right there and actually moving houses and taking over and building this huge sound barrier. But because of the inventory shortage, it didn't affect people like they thought it was going to do. So it's whenever you can add easier access, it certainly does help the values in those areas. And thanks again, Cody, for the super chat. So, hey, maybe tonight, I'm not sure, tomorrow, I'm going to do another cruise in the hood. And I'm going to take a look at South Scottsdale. It's got a real mix of you name it. You can have $1 million condos, $1 million homes, $500,000 homes, or $175,000 condos. There's all kinds of stuff going around down there in South Scottsdale. But what you have to watch is when you're looking at patio homes and condos, make sure you pay attention to those HOA fees, because some of them are just through the roof. And some of the HOA fees are so high, they better be serving me breakfast in bed, but they don't. So you have to watch out for those high HOA fees. Everybody have a happy, wonderful hump day. Don't forget, don't leave until you smash that like button. Thanks again.